This is Carl with your Kansas Weekly Livestock Update. And I gotta tell you, I just don't even know where to start this week. Obviously, the big point of interest in the market as we closed out the week was the tariffs and what tariffs are going to do to commodity trade. Um, Beef and pork, two of the big ones. Beef and pork obviously getting hit by this. Look, Friday's trade here, we had fat cattle down over $6, pushing $7 and down eight and a quarter, $8.25 on the feeders. Really, that's where a lot of the managed money was sitting, though. Managed money traders have held these record long cattle positions, and we've been talking about them for several weeks here. I was uneasy with it, and it's easy to say I know, but it made no sense to hold those. So when we saw the tariff news, it hit cattle harder than it did hogs. And that's, you can say we would have seen, you'll see demand drop on both. Well, you will, but we've already seen, a lot of that long hog position. Yeah, granted, funds are still long, about 50,000 hogs, or they were this morning, but they're long almost 40,000 feeder contracts, and we were sitting about 160,000 long on the fats. So we knew a correction was coming. I didn't think we would try to shave it all off in two sessions, but we got to look at the trade developments we've had. I don't know as if our beef exports will be hurt as much as pork. I do think our pork exports are going to get hit. I think from the demand side, that's why we've seen more pressure on hogs than livestock. The livestock pressure is coming from the managed money side on the cattle. Um, on the hogs, not so much. It's just, on the nearby, we're seeing support. We actually had the nearby hog contracts on the plus side while the deferreds were down. The exports are a little concerning on the deferred pork because, obviously China. But Mexico and Canada didn't see the increase in tariffs, and they're 40% of our demand. So we're sitting a little bit better there. Long term, short term, who knows what's going to happen? But we don't have a very big pork supply right now, so it's kind of evening out. We're trying to get some type of a sense of this whole damn situation. On beef, you got to look at where our beef goes. Japan, South Korea, both saw tariffs of 24 to 25% put on. China, another 34%, and then they hit us with 34%. So those three are the red meat destinations that I'm probably the most concerned with, where if we see something drop off hard, it would be there. Now you got to question yourself, okay, but our beef demand is getting very, very light. So we could see some demand walk away. We could. The question now is what's going to happen to retail demand in the United States? If our economy starts to stutter a little bit, will we see, cuts for red meat going into the grilling season? Box beef has rallied pretty hard this week, indicating that we're seeing a little bit more demand for ground beef, which coincides with seasonal shifts to the grilling season. But we also tend to see higher ground beef demand in tighter economic situations, such as this year and what we potentially have coming at us. We're starting to see more indications of a recession. JP Morgan put the odds at 60%. That does not bode well for red meat demand, and it certainly doesn't support $200 fat cattle. The retail side will push back incredibly on this, and that is what trade is a little bit more concerned about when it comes to beef than necessarily the export side of it, although like I said, it's a factor. Here's the thing on the economy, and this is something that was pointed out to me today. Um, and I found it a little interesting that yes, the economy has been doing quite well. the economy has been doing quite well lately and spending has been up because it's not necessarily your lower income and it's not necessarily your midcome, it's your upper echelon of income where there is more discretionary spending available. That is where a lot of our high-end red meat demand and other demand in the entire economy has been coming from. So when you hear economists, and people say, well, the stock market's crashing isn't going to affect the economy because it's only a few people, those are the people that have been keeping everything going. If you start to see the economy stutter, they start pulling out, there's nobody left there. It's the old saying, will the last one out please turn off the lights? And that is what is the most concerning about the entire commodity market going forward. A, the uncertainty, but B, if we start to see the economy stutter, it could go from bad to worse. Now, that's worst case scenario. You got to look at the other side of the equation too. If you beat markets down bad enough, you do tend to see buying. And this isn't just a US issue, this is a global issue. You know, maybe we do see some trade negotiations. We easily could. But, it's the countries that we put tariffs on this week that didn't have them on the United States. Those are the ones that are a little bit in shock yet. The final thing, and please take this away because next week we have a WASD report on Thursday the 10th. And hopefully that's going to take a little bit of interest away from all of the tariff talk here. We'll cool down, maybe can see some positioning. But I want you to remember this. Tariffs do not change balance sheets. Okay? They can trade patterns, they can change a lot of things, but they cannot change balance sheets. Global corn supply, a decade low. U.S. soybean supply already being rationed. New crop soybeans on the verge of needing to be rationed, even if we cut some demand out of the equation. Corn, we're using more corn than what the USDA has indicated. Corn cancellations, I doubt it. We don't have any to China. Mexico, another leading buyer, they need our corn, so they're going to take it. Quite honestly, there's no other place to go right now to replace it. So I don't think we see corn cancellations. Let's just let the market cool down a little bit, and I think we'll come out. We're gonna have to claw our way back on this, but if we can just stop the tit for tat right now, that is what we need. Those are the big factors we had in the market this week.